If you have less than $10,000 in your trading account, listen up. Compound trading can help you build your trading account balance faster than you think. This video will show you how compound trading works and how you can put it to work for you. All right, let's do it. Compound trading is the act of reinvesting all gains to leverage profits. Instead of withdrawing your money or daily gains, you keep it in your trading account. In turn, you have more money to trade with. Now you can take larger and larger positions with your increased purchasing power, chasing larger and larger gains. Compound trading is not a get-rich-quick scheme. It's a detailed plan to build wealth over time. Anyone can take crazy risks. It takes real discipline and strategy to turn your ones into 100s. Be sure to click the link in the description. It'll take you to this blog entry written by Tom Chen, and it's going to show you the power of compound trading and how you can grow a small trading account into a large one. This example says it all. You've got an initial investment of $10,000. You've got a strategy. You're expecting a 5% monthly return, which is fairly modest, and instead of withdrawing your profits each month, you're going to reinvest them or leave them in your trading account with the idea that you're going to build your initial account balance, leverage up, and really turn your returns into something significant. And you can see in just a year, you go from your starting capital of $10,000 all the way to a nice tidy 17.9. That's almost an 80% return on your profitability. So as you can see, when you compound your returns, when you compound trade, you have the ability to take an initial starting capital that's modest, a modest monthly return, and build it into something formidable in a very short period of time. Okay, here's our How to Trade Forex Compounding Calculator. The link to this tool is in the description of this video. What we're going to do is we're going to enter a starting balance, $5,000. We're going to stay with a duration of 1 year and 0 months. So we just want 1 year. We're going to assume a 3% growth rate, and that is going to be compounded monthly. So we're starting with $5,000. We're going to let this run for a year, reinvesting all of our profits back into our trading account. We want a growth percentage of 3. So that's our profitability. We want to establish a 3%, and we want to do that monthly. We're going to go ahead and do this in US dollars, and let's calculate the profit. And you can see right there, it shows you exactly what you're working with. Our initial balance was $5,000. Our compounded annual growth rate was 43.27%. Sounds big, only 3% a month. And then your future investment value is $7,100. So our total earnings were about $2,100, fairly significant, $2,100 on $5,000. That's a nice return over a 12-month period, and that's just with a minor, I would say a very conservative 3% growth rate. So remember, you're going to see profitability ebb and flow, but if in fact you can establish a 3% growth over 12 months, starting with $5,000, you're up to $7,163. And if you hit in the 5, 6, 7, 8, 9, 10% a month, then you're going to have much larger returns. And you can see that's a real reasonable return on investment, and you've got a nice 45-degree growth rate. That's the compounding calculator. Check it out at How to Trade. Compound interest is the 8th wonder of the world. Einstein said that, and he's absolutely right. Warren Buffett, State Street, BlackRock, they've all made billions in wealth compounding their returns. Now, if you're interested in compound trading, check out our suite of compounding tools. The links to the HTT Compound Calculator and our compounding trading plan are all in the description of this video. If you have any questions or comments, leave them below or visit howtotrade.com and send me a private message. All right, that's it. Like, subscribe, drop a comment below, and we'll see you on the next one.